Hey everybody, Rick Mount, Paradigm Mortgage Group, and today's Friday, so I'm bringing you this week's market update, let you know what's going on. It was kind of a weird week, a little bit of a roller coaster out there, and let's just jump right into it. I'll show you what's going on with the interest rates. You can kind of see here, it's kind of been a wild roller coaster over the last couple of months with a lot of stuff going on. Some of the volatility is related to the government's continued support in buying mortgage-backed bonds to keep rates low. So we'll look at it most recently over the last week or so. You can kind of see here it is at the beginning of the week, and here we are at the end of the week. Green means that was a great trading day for the bonds, and great trading day means that rates go down. On the red means the bond didn't sell as well and has a negative impact on interest rates. So today, Friday, ended up with a good close day here, as you can see, and we expect they continue to trade in a pretty narrow range as we head into the election. So let's look at what's going on for the rest of the week. Really, the big things that are on task here, the election's closing in fast, and quite frankly, the fiscal cliff is running a second in the markets. We expect the rates to kind of trade in a narrow range until the leadership of our country is defined. And as always, there's still a little bit of fear about what's going on in Europe as well. But next week's unemployment week, this could have a big impact on the interest rates as economic figures still have a significant impact on what's going on. So we'll have to keep a tight eye on that. And obviously, as we move closer to the elections, if there's clear direction, that could drive the market ahead as well. One quick note that we want to talk about looking ahead next year, taxes are going to have to increase. Spending cuts are going to have to take place because of the debt that the country is in. But most importantly, let's talk about something that affects every homeowner. Over the next 2 months, borrowers who benefited or will benefit from a short sale or a principal reduction loan modification will not get hit with a tax bill because of the mortgage debt forgiveness. But unless Congress allows the mortgage debt forgiveness relief provision in the tax code to continue, it is set to expire on January 1. So anybody that would have a short sale or a note modification that resulted in principal reduction after that would see some possible taxation. So in closing, Dow Jones had a rough week, down 237 points. Mortgage bonds are about flat. That means conforming rates are trading in the mid to high 3% range, depending on your FICO score. FHA and VA loans are still at historical lows, down in the low 3% range, oftentimes with some credit. So this is Rick Mount signing off for the Friday. Hope you have a great weekend, and if there's anything we can help you with, we look forward to working with you. Have a great week.